Hey, how's it going? Welcome. My name is Alexander. Welcome to The Conservative Investor. We're going to be talking about investing for beginners, how to get started, trying to make this not only as painless as possible, but honestly, investing should be fun. I invest because it's fun. So clear up some misconceptions. Investing in the stock market is not all about stock options and puts and calls and what was that movie? Get Short, Get Shorty, or The Big Short, I don't know, whatever it was. It's not all about stuff like that. Investing in the stock market can be fun. I don't want to say easy. It does take a lot of work and research to be on top of it, but it definitely doesn't have to be risky. You can make money without it being risky. So, starting at the basics, before you start investing, you got to look at your expenses. You look at your fixed expenses, your unfixed expenses, and then you have two savings. Just money that you're saving for a rainy day and money that you use for investing. Your fixed expenses, pretty obvious. Your rent, your groceries, your gas, any recurring monthly subscriptions or monthly bills that you have to take care of. Then your unfixed expenses, which is pretty much leisure, extra cash, like if you want to go out every once in a while. And then your savings, which is your emergency fund, your rainy day fund, just your savings, because you then pull money out of your savings for your investments. So the way I see it, you got 4 different places for your money, 4 different ways you allocate, spend your money. And so, do you have a job that pays you enough to allocate all that out? And before we get into investing, I want to talk about the basics of what is investing. What are stocks? So a stock is basically, I want to say a piece of paper. Back in the day, for our purposes, easy to explain it that way. A stock is like a piece of paper that says you own 100 million for 1/100,000th. Whatever one fraction of this company. The bigger the company, the smaller that fraction is. Like if I own 1 share of Google, I don't know, what is that, a billionth? I don't know how many shares they have out, but you technically own a part of that company. If you own a share of Apple, you own a part of that company. Because what stocks and shares really are is you are lending that company money so that they can expand their business. The reason why a company puts out stocks to be publicly traded, puts out shares of their company, is because they're trying to raise money to grow their business, to do R&D, to do research and development, to expand their business. So, got some of those basics out of the way. Now, because you're lending a company money, who are you lending that money to? So the biggest thing with stock trading, stock investing for me, know your company. This is something that Warren Buffett has said, I think, but one of the biggest things, know your company. If you know your company and you know their business, there's nothing to worry about. That's the part where I was like, oh, stock trading it's not scary, I don't want to say it's hard, but you got to do your research. You got to be on top of it. Now, the next bit I want to talk about, so before we get into actually, it's going to be a minute before we actually talk about investing your money. So you need to decide, is it a good company? Is it a strong company? How do you know if it's a strong company? I use a lot of different channels. I use a website called Macro Trends. And on Macro Trends, they're going to show you revenue broken down by year, by quarter, because you have fiscal quarters for these companies. Every year there's, I would assume, 4 quarters. And they'll put out earnings reports, and they'll show, like, did they beat expectations, exceed expectations? Are they right at the expectations? Did they lose? Did they fail to meet the expectations? And that will affect the stock price. So I look at revenue, I look at net profit, so how much money they're making, how much money they're actually taking home, so it's how efficiently they make money. I look at debt as well. How much debt do they have? Now, these can vary over time. But I'm gonna stick to the basics for this first video. So revenue, net profit. So revenue, how much money they're making. Net profit, net revenue is how efficiently do they make money. And debt. Everyone knows what debt is. How much money do they owe? You know, how much they got to pay off. After that, so if I found a good company, they're making money, they have low debt, they make money quickly and efficiently, do I buy a stock? No. I now want to compare them to at least their top 3 competitors in the same market, the same industry, same niche. How do they compare versus their competitors? If they're succeeding against their competitors, great. Do I still buy it? No. So it's a strong company, they're making money efficiently, they have low debt, they're beating their competitors. Do I buy it yet? Absolutely not. Why not? So there's something called the RSI. We're going to look at some technicals. It's going to be a simple intro. I'm only going to show you one thing today. RSI, I think it's Relative Strength Index. Doesn't really matter what it stands for. All that matters is, look at that RSI, it's that little line at the bottom there. When it gets down below 40 and towards 30, that means it's underbought. That means no one owns the stock. And if no one owns the stock and everything else is right, as in it's a strong company that's doing great, that means pretty dang soon it's going to frickin' pop back up. Now that depends on a lot of other macroeconomic and microeconomic and political factors that, you know, when will the pop come? When will it pop back up? I don't know. But if everything else is great, it's going to come back up. So if that RSI is down low there, that's one of the reasons why you would buy now. If it starts going up high, up towards 70, it's overbought. That means everybody owns it. Basically, like 90% of the stock is held in people's hands. Everyone already owns it. Which means a couple things. One, if this is a very strong company and there's a lot of hype, and this is where research comes in. We're going to be talking about this pretty soon. Research, in terms of knowing if there's a lot of hype, if there's a lot of buzz around this stock, around this company, it might hop up around, maybe bouncing around that 70 for a while. Just hold on. And that's when we get into more detailed technical data that I'm not going to talk about right now. But basically, if you see that and it's a strong company, hold on. Just wait. It'll come down. For instance, SoFi. You may have heard of it, SoFi Stadium. It's a fully online bank. They're trying to be the future of banking. And right now, they are the most underbought they have been in like about 6 months or so, maybe a year. Very underbought. So, am I going to buy them right now? Maybe. There's a few other factors involved. I'm not going to do that right away. I'm going to touch on a few more subjects before we end this video, because this is just the first one and I want to get some information in here. I look at building a stock portfolio and stock trading like building a sports team. A deck of Pokemon cards, a deck of baseball cards, fantasy sports league, sports team, whatever you think. I'm trying to build the strongest team to beat all my other competitors, to beat all the other teams, to win. That's what makes it fun for me. That's how I stay on top of it. So you're always going to be you're going to be trading players. You might have to bench someone. You might have to invest more into one than the other. Give one of your players some PT. One of your players might have to get retired. They've had their golden age and now they're done, or they got hurt and they can't play no more and they're out. Make it fun. Make it like that. Now, one more thing. Find something, especially when you're starting out, find something fun. Find something interesting to you that makes you want to be on top of that research all the time. For me, military. I like guns and tanks and submarines and stealth bombers and fighters. I think that stuff's really cool. And so I stay on top of it. I have a lot of different channels that get me intel on that. And for one, I read the paper at least once a week to get me broad data and some stuff I may have missed. And then I subscribe to a couple YouTube channels for military, for like that specific niche thing. One is going to be Task and Purpose, Cappy Army, War Fronts, and they give me specific intel on stuff that's going on. For instance, recently there was an episode on Task and Purpose where they talked about General Dynamics Land Systems, an American company, teaming up with Rheinmetall, which is a German munitions company, to build the new M2 Bradley. I suppose M2, it's the successor to the M1 Bradley IFV, infantry fighting vehicle. I love that stuff. So cool. I already own both those companies. General Dynamics builds all of our nuclear subs. Rheinmetall builds a lot of air defense vehicles and IFVs in the EU. They're one of the biggest defense manufacturers in Europe. In fact, they might be the biggest defense contractors in Europe. I bought that company when it was less than $100 a share at the start of the Ukraine war, and now it's like quadrupled in value. So whatever your morality, you know, you might not be into military stuff, to each their own, but this is my thing that keeps me interested and it's interesting and cool. So let me tie this in though. So I have multiple channels of research. I have these YouTube channels, and then I'll also have the newspaper. Why the newspaper? I was reading in the news, I'm not going to find it right now, but that Trump offered Zelensky a crap deal that would basically benefit Russia and is not good news for Europe. What that is good news for is the Europe military-industrial complex. If Trump keeps giving the middle finger to the EU in terms of helping Ukraine and all that and that conflict, I mean in general, but specifically for us for military stuff, then they're going to continue to double down, triple down, quadruple down on their military stuff. So at this point, for me, Rheinmetall at over $300 a share for the ADR, American Depository Receipt. It's when you buy a foreign stock in an American market. Either way, over $300 a share is a little rich for my blood. If I was making a lot of money, I might invest a lot more right now. I don't know how much higher that can get. But if you got a lot of cash lying around, might be something interesting to look into, because Rheinmetall is involved in everything and everyone right now. General Dynamics too, helping with the AUKUS Pact in New Zealand, Australia, and the Pacific to help defend with nuclear submarines against China. Yeah, so that's it for today. I tried to pack a lot of information into one video, first video. Stay tuned for the next one. Stay classy.